Hello, Oracles. Well, the Fed minutes just came out about 40 minutes ago at the time of this recording. And right now we were really red to start the day as we kind of anticipated leading up into the minutes. About an hour before the minutes were coming out, we started to see a rally coming back into it. I think part of that was because many people kind of knew what was going to go on in the minutes, so they were just rallying back up to this, assuming they were going to get the information that they had already known. And so we saw the rally, then we saw it come back down, and we're kind of, with Tesla alone, battling around 1050 right now. So let's see how we close to finish the day out. Let me know in the comments how you think we are going to finish the day out. And so that will kind of determine how we go. But the way I look at it is the information we got out of this was just reiterating basically what we already knew, which is that the Fed is open to raising the rates faster with a 50 basis point hike rather than a 25 basis point hike if need be, based upon inflation data that they get. And so this is something we already knew, as Jerome Powell had mentioned this previously. This reiteration of it is just kind of bringing it back to light, and that's causing the FUD in the market and that bit of a sell-off. And so the battling in the market that we're going through right now is just a lot of all the analysts and all the investors and institutions are digesting all of the information that they are getting from the minutes, and we're trading accordingly off of this. I think the more important stuff to look at is going forward. So the information that we got today was, if this happens, then this is the action the Fed is going to take. So what are the ifs? If inflation is higher and we continue to go up and do not show that an inflection point coming down, then the Fed will have to raise rates higher and faster than they initially planned. So a lot of the information we got today is contingent upon how inflation progresses going forward, which is why April 12th, where we get the next CPI data, and then we're going to get the PPI data right afterwards, is going to give us a great indication as to which way the Fed is going to move when we get to the FOMC meeting on May 5th. So we'll have to pay attention to next week. I think for Tesla in particular, we're kind of at the point where we're now unsure, but the thoughts of a 50 basis point hike are now cooked into the market. So we should see the rally tomorrow, maybe a little recovering from the sell-off today. Probably continued on Friday with a little bit of a rally based on the news that we're going to get out of Austin tomorrow. So I think the next 2 days could be green. We'll see how we finish today off, see some of the information we get from institutions and analysts based off of the notes from the Fed meeting, and that'll really determine how we go. But I think next week, going up into CPI data and PPI data, we are going to have a lot of uncertainty and some selling off. Because if we get high inflation, which we know we are going to get, that is going to signal an indication that the Fed is probably going to go with a 50 basis point hike in May. Now, some of the Fed has said that they would like to do a steady increase of this and just do a 25 basis point hike for the foreseeable future, while others said that they should do something more drastic initially to get a jump start on this since they are so far behind. And these two differing viewpoints are exactly why we're at the place right now where the market is battling in the middle, where some are saying we're going to get 25 and some are saying we're going to get a 50 basis point hike. The next step after that is going to be in June, when we get the June FOMC meeting, where they're going to discuss what's going on for that one, because if we get a 50 basis point hike in May and the CPI still continues to come in high, we might get another 50 basis point hike in June. This is something that they mentioned in the meeting, and this is why the market is reacting the way it's reacting right now, because one 50 basis point hike is enough. We get a second 50 basis point hike. That hasn't fully been priced into the market yet, and that's why we're seeing the sell-off. And so what all of this means is that we are now pricing in a worst case scenario, which would be a 50 basis point hike in May and a 50 basis point hike in June. And so when we see the CPI and the PPI data come out, that will determine which route we are going to go. So if we have priced in a worst case scenario, and what ends up happening is there is an overreaction to that, so we're going to go further down in the pricing than we normally would be. So if we end up getting to the point where it's only a 25 basis point hike, we will rally. If it's a 50 basis point hike, we're probably still going to rally, very similar to how we saw things go in March, because that was already priced in. We got what we expected, so the markets rallied afterwards. So this is why I think May is going to be that second bottom, but if inflation continues to go a lot higher than we expect, then we might actually continue the drop going into June before that meeting, and then we will climb out of it. So still some uncertainty. So I think from here through probably June, unless we get some really good inflation data in May, I think we're going to see a lot of uncertainty and a very similar pattern to what we had seen between January and March of this year. And so now when it comes down to Tesla in particular, I do think that we are going to see a little bit of a rally tomorrow and Friday, as I said with the Cyber Rodeo. And due to the way that we opened today, we actually have a gap now in both directions. So we have a gap that goes down to 1010, another one to 905, and a tiny one that goes down to 801. And then going up, we actually have a gap down that was caused today. So we have a gap now between 1089 and 1079. So we might actually fill that upper gap first over the next couple of days. And then as we do this sell-off going into May and June, might fill 1, 2, or all 3 gaps, depending on how drastic the market wants to react to the inflation. And then we're just going to kind of follow the macro environment just like we did for the first few months of the year. We're going to end up following the macro environment. We're going to get our Q1 earnings, and the Q1 earnings may be great numbers, but we'll see what information we get out of it as far as a split goes. You know, we may have Tesla be an exception to the rule when it comes to the macro environment with split news, but don't forget, we already rallied on the potential split news. So it's still a lot of uncertainty. I'm not sure which one's going to weigh heavier on the market, whether it be positive catalysts out of Tesla or whether it's going to be negative catalysts from inflation and interest rates going up. This has yet to be seen. Lots of data points to follow along the way, which the first one is going to be CPI coming out on April 12th. And so as I stated in this morning's video, it is going to be a great buying opportunity for Tesla. I added a little bit more today myself at 1044, and I'm going to start paying attention, and I'm going to do like I did previously, but reverse. I'm going to add little bits at a time as we come down. Now again, I'm not a financial advisor. I don't have a crystal ball. We may rally after this to begin with, and we might not come down at all. But just looking at the data points that we have, looking at the information we're getting out of the Fed, I have a feeling we are going to see a downward trend for the next month or so, with some shining lights here and there with the earnings and the split information and proxy. But don't forget, when it comes to Tesla, we do have Shanghai closed until April 18th. That is very negative for the company. There aren't many negative catalysts for Tesla right now, but that one in particular is negative, and we have to pay attention to it. So that being there, and then we have the interest rates going up, inflation still going up. This means that we're most likely going to see a little bit of red in the market over the next month, which just means that it's great buying opportunities. For me, I'm at 7.5 shares in my main portfolio for Tesla. I would like to get to 10 shares before we get to the split. So I'm assuming we're going to get a split announcement. Dates are probably going to come on the earnings call, and then we'll have the annual meeting in June with a split thereafter. So that gives me a couple of months to add a few shares, and with this dip coming, that is going to be an amazing buying opportunity to add those shares prior to the split. And now this also does not take into account we are still dealing with Russia and Ukraine. There are more sanctions that have been put on them over there. The UK has said that they are going to be completely shutting off everything from Russia by the end of this year. And as someone had pointed out in the comments, if Germany decides to cut off the gas from Russia altogether, that might cause Tesla to have to shut down the Berlin Gigafactory. I don't know enough about the specifics that are going on over there. I don't know enough if Tesla will be able to function their factory in Berlin without the gas that's over there. If there's anybody else with any conflicting information that can tell us otherwise, please share in the comments as well. Because for me, the way I look at it is Tesla can pop up a whole bunch of mega packs and some solar. They've got the huge solar panels on the roof of Austin. Can they do the same with Berlin to be able to run off of that and be self-sustaining and not have to worry about the gas? That I'm not sure of. I don't think they are to that point yet. So if they got shut off tomorrow, could that be an issue? This I do not have an answer to, so if you can help share in the comments below, that would be great. And so while we do still have quite a bit of this uncertainty going around right now in the macro environment and some of the negative catalysts for Tesla in particular, this is still near-term catalysts, near-term issues that are going on. Long-term, Tesla is going to be perfectly fine coming out of this, because don't forget, Tesla is not the only company that is being affected by all of these issues. Everyone else is as well. And Tesla has already proven that they're better at weathering this storm than everybody else. So again, it may bring Tesla down in the short term, but that is just going to be a great buying opportunity for the future. Thank you all so much for watching. I appreciate all of your support and feedback. If you have not subscribed, please do so down below. Sign yourself up for notifications. I am over on Twitter at OracleTim1. I share all of the latest Tesla news, pertinent stock market information, and all of my daily trades. Thank you so much. Have a great one.